Today in this video, we're going to be going over the growth equation, a mathematical formula on how to grow your business. Think of operating a business like flying a plane, right? So pretend you're the pilot of a plane. What the growth equation does is it shows you which levers and dials you can shift to end up growing your business. A lot of people don't end up learning this thing and end up flying their plane out into the middle of the Atlantic Ocean and dying. But what we're going to do is show you every different step of the way to grow your business and how small changes in a business can end up leading to massive results. So how does the growth equation work? The growth equation starts off by looking at all of your existing numbers. So where are you currently? Think about you're making a flight plan to grow your business. The first thing you need to know about is where you are. If you want to get to a certain destination and using a map, for example, you need to know two things. You need to know where you currently are and then where you want to go. And then you can plot your route from there. So what we've done is we've went and filled in the numbers here for a mock business. And for this business, we're saying there is 2,000 existing customers, and they currently have a 20% retention rate. So this flows into the retained customers. So this business has 400 retained customers every year. And they have 10,000 leads and inquiries. So these are people that are coming and visiting their website, they're emailing them, they're messaging them on Facebook, they're coming in and talking in the store, talking in person. These are just leads and inquiries they're looking at potentially working with this specific business. And they have, in this business, 20% conversion rate. So they acquire 2,000 new customers every year. So that brings their total customers to work within a year at 2,400. So this business is effectively growing at 400 customers per year on a year-on-year basis, with majority of them being new customers, not retained customers. So out of these 2,400 customers, this business has $100 transaction value. So every time when a person comes in to purchase in their store, on average, it's going to be $100. Now, sometimes it'll be $50, sometimes it'll be $500, but on average, for this business, it's $100. And then you want to look at how many transactions on average does a customer do with you per year. So for this business, it's 5. So let's say 5 months out of the year, a person comes into this specific business and purchases something for an average of $100, which makes your average annual customer revenue at $500. So on average, every customer you have is going to spend $500 with you a year. And so what you do is then we times your average annual customer revenue by your total number of customers, which will equal your annual revenue, which you can see here is $1.2 million. This is quite a good business, quite a good small business, which is, got 2,400 customers that is currently making $1,200,000 a year. Now you go over to your cost of goods sold. So the cost of goods sold is all the products and services that you need to purchase. So let's say that you need to buy for you to make a purchase. So let's say like you're purchasing stock. Well, then that is a cost of goods sold because you need to purchase the stock first before you can sell it. So that is your cost of goods sold. So for this business, it is 55%. So 55% of every sale they make goes towards cost of goods sold. So let's say they sell $100. Of course, we're not including taxes or anything like that with this to make it simple. But let's say they sell $100 worth of stuff. Then $55 of that they had to spend just to make that sale. They had to spend $55, they spend $50 on purchasing the product and then $5 shipping to get it there. And so this business has $660,000 in cost of goods sold, which means that they will have a gross profit of $540. So that means that they've got $540 to spend on wages, on rent, on insurance, on electricity, just the general day-to-day running of the business. So for this business, we're saying that they have $400 worth of expenses. So they're spending on that on wages, on, like I said, insurance, rent, things like that. So for this business is making a net profit of $140,000. So if you take the gross profit that you made after you've minus your cost of goods sold off your revenue, and then you minus the expenses or your overheads off your gross profit, that will get you your net profit. Now, net profit is not cash. That's something that a lot of business owners need to understand, is that net profit is simply the way I like to think about it is just simply what builds your wealth, right? So in this business, the person who owns this business grew by net wealth of $140,000, right? But doesn't mean they have $140,000 of cash in the bank. So let's say that, for example, someone purchased a business and they have $1 million worth of debt to purchase that business. And let's say they have to pay 10% back every year for that. So let's say it's $100,000 for simple maths a year to pay back to the bank for them to have borrowed that money. So then they say, let's say they have $50,000 worth of interest. Well, the $50,000 of interest would be shown in the expenses account because that's an expense for the business. But repaying back the loan will come off your net profit value. It'll show in your balance sheet where you'll have your assets that you own, which will be your capital, your cash, any real estate, vehicles, things like that. And then it'll have your liabilities. And the liabilities in there, it'll have, say, $1 million worth of debt. And then what'll happen if this business had $140,000 of profit, $100,000 would go to minusing off that liability. So on the balance sheet, you've grown. That $140,000 is shown as you've made that in equity by minusing off that debt, but it didn't show up in the bank account. So this is something that a lot of people don't understand when they purchase a business. Is they think that, I've got $140,000 net profit, but where's the money in the bank? It can show up in places like that. So, how does this help make your business? How can you use this to improve your business? Well, what you need to do is understand is that each one of these different areas here, each one of these flows through into making your net profit. So if you understand how to manipulate each one of these areas in small little ways, you can end up having a massive effect on this on your net profit, which I'll show you in a second. Alright, so let's say you've got this business and it's making $140,000 of net profit, but you want to improve it. You want to grow this business. So let's look at how we can do that. Now, before we start on this, what I want everyone to do when they use when they do a calculation like this, or when they do any sort of business planning, is you want to be conservative. A lot of people with their rose-colored glasses on when they do this sort of thing, and they I want to double this, and I'm going to triple this, and they get all high in the sky. And it's not saying that you can't get those numbers. It's not saying that you can't quadruple your leads, or you can't double your conversion rates. You can, but you want to err on the side of the low numbers, if that makes sense. Err on the side of caution. It's better to underestimate what you think you can do than overestimate, which is what a lot of people do. You want to stay in the realm of reality. The way I think of it is like the spectrum. You've got like optimist and pessimist, and then it's in the middle of this reality. You really want to be sitting in that middle of reality and going like, hey, what can I actually do? And then when you're doing this, you want to just push a little bit over to the pessimistic side, if that makes sense, just to make it as real as possible. Because you want to be able to actually do these things. So let's go through this. So if I was going to grow this business, what would I do? So the first thing I would look at is the conversion rate, not the leads and inquiries. Of course, if you're running a business right now and you have great conversion rates, you might want to look at your leads and inquiries first. But for majority of times, you want to plug the holes in the bucket before you start pouring more water into it, if that makes sense. So what you want to look at is, when people visit the website, how many people are converting? How can we improve that? When someone calls on the phone, how often are they converting? What's do we have conversion content? These are things like your ebooks or flyers and things like that you can give to someone, not to bring them in as a lead, but to convert them, to educate them on your product, or educate them why it's worth it. A really good one of this on your proposals. If you have a good explanation and a good anyone that's worked with Kozler will understand this, that all our proposals will have a framing part of things, which explaining all of the questions that we believe that people are asking when they're getting a proposal and addressing those issues directly. All those things can increase your conversion rate. So let's say we put that in place for this business. And this business is we redid the whole website. We redid it. We looked at the customer journey through a website. We looked at all the questions that people want to answer. We did customer surveys. We did all that. Then we created conversion content. So we looked at what books can we write to give us authority. What can we add to our proposals? What are the key questions people are asking? What information do people want? And then we looked at our sales structure. We don't believe in having everything laid out as a script. We think that's actually quite robotic. We believe in sales frameworks. So we want to take a customer through a framework and ask strategic questions to really understand that person, build rapport with them, really understand and provide value to them. For us, it's really about how can we serve someone before we look at how do we sell them. So we do all that. How much do you think we could increase the conversion rate for this company? Could we increase this to, say, 25%, 30%, maybe even like 40% people come through? Well, what we're going to do is we're only going to increase this to 22%. So this is just a 10% increase in the underlying conversion rates. And by doing all of that, only by like a effective 2% increase in conversions. And this is where I want to say this is, you'll see this as a theme as we work through this, is that we're going to be sticking with very low conservative numbers. Even though, again, this could be 30%, could get us to 40%, but I want to show you how this can actually be true for your business. I want to really make it as low as possible so you can see how this can make a massive difference in your business. So, after we've got the conversion rate right, now we want to start pouring water into that bucket that's got all the holes plugged in. So, let's look at leads and inquiries. So how would we improve leads and inquiries? Well, let's say for this business, we introduced a conversion strategy. So we looked at a conversion strategy. We then looked at running targeted campaigns around specific themes or targets. And then we started looking at a referral strategy as well, which just means how can we get our existing customer base to then refer people onto our business? A lot of businesses will find that this is one of the most effective ways to grow, is turn your existing fans and existing business into salespeople for you, bring customers in. So let's start with the conversion strategy. So how would we look at this? We really look at a content strategy. We look at content strategies and we look at 5 different areas. So think about this as talk about this in as your organic strategy. We've got 5 different areas. We want to educate your people. You want to educate them on your products, on your industry, on your business. Then you want to engage with people. You want to be answering comments. You want to be engaging with groups. You want to be creating your own groups and helping people and fostering that community. And then you want to be informing people. You want to inform them when you get a new staff member on board. You want to inform them when a new product comes out. You want to inform them if there's a white paper, for example, of your industry. You want to keep your clients and your community informed. And then you want to entertain them. You want to be posting memes. You want to be posting relatable, fun content that people are just going to brighten people's day. Not everything has to be business. Not everything has to be like education and this. You want to make people laugh. You want to relate to people. Like, they're not robots. They're human beings. They like looking at cat photos. Okay, it's just the reality. And then you want to look at events. Events are things like today I'm recording this. It's Valentine's Day, so you could do a Valentine's Day post. It could be Mother's Day or Father's Day, or it could even be an industry event that you want to target. You want to look at all the events that you want to recognize and create content around those events and just capture that audience. So let's say we put this in, and then we put this in place. And then we move over to targeted campaigns, which means we look at different themes. So it could be a theme around a specific sale that you have. It could be a theme around a specific client or target base that you want to have, specific issue that you're targeting with your specific product. And we will create out a structured sales funnel for this specific business. And then we create that referral strategy. So we create something where, let's just say for simplicity's sake, when your clients come in, you say, and they work with you and they love your product, you say, hey, look, if you tell someone else about it, we'll give you we'll give you $500 and we'll give 20% off for your friend for the first month, for example. So say for this business, it's they're currently making $500 of an annual revenue for a client, but they have 55% cost of goods sold, so they're making about $225 per client that's coming in. And let's say on average their clients stay for, let's say 10 years, just easy numbers. So every client on average they get is worth $2,250 to them. So what this company did is they worked out that if say their clients are worth $2,000, what they'll do is if some client of theirs refers a friend, they will give them a bag of dog food for that month and their friend a bag of dog food. So it ends up costing them, say, around like $100. But they spend $100 giving that stuff to their clients and to the and to their referral. But if that person stays, then that they will make $2,000 on that transaction. So it ended up it was one of their clients that they never paid for a bag of dog food. Every month they would refer a friend, They would get their free bag of dog food, and they would give their friend a free bag of dog food. Everyone was happy. It was a win-win-win all around, and that business ended up making $2,000 every month from that client on over the lifetime of those things. So it's absolutely amazing, some of the referral strategies and stuff that you can put together. So let's say we did that. We implemented a content strategy, we implemented doing paid campaigns, and then we looked at doing a referral strategy. What percentage do you think could increase this the leads and inquiries for this business? Could it be could we double it, triple it? Honestly, this is actually an area where a lot of people can, especially if they aren't focusing on getting more leads. There's so many people out there that don't know who you are and need your services. This is something that you can really ramp up. But again, with the conservative element, let's just say we increase this. It goes from 10,000 just to 12,000. So we've increased effectively 20% overall in leads. Even though we've implemented a full content strategy now, and we're pumping out content in each one of those 5 areas, we're doing paid campaigns, targeting different target markets and looking at who we can concentrate on. And then we've also implemented a referral strategy, turn our existing clients into salespeople for our business. Effectively, we've only increased it by 20%. I think most people would agree that is very doable for a business. So we've in total, we've increased the acquired customers from this business by 640 people. So we went from 2,000 to 2,640 just by increasing this from 20% to 22% and 10,000 to 12,000 inquiries. Now let's look at we've got these clients coming into the basket. So now we want to keep them, right? We want to retain those customers. So let's look at a retention strategy. So how might we do a retention strategy? Retention strategies can be different for different type of businesses, but let's just give you a couple examples. So let's say for this business, we looked at implementing a loyalty system. So we looked at making sure that if a person shops with us for every so often, they get points and they want to stick with that one business to earn those points. We look at increasing the customer service and customer satisfaction. This is actually something that a lot of people some people get confused about, the difference between customer service and customer satisfaction. Customer satisfaction is the customer happy with working with you? Customer service is, did the person smile and and was cheerful, right? Like, that's very different. If you have a shitty product, but you have great customer service staff, you might have great customer service, but you're still not going to retain those customers. You need to have both. You need to have amazing staff that are amazingly polite, and you have this great relationship, but you also have to have a good product or service. If you don't have a good product or service, people are going to use you, think, oh, well, nice people, and then never come back again still, right? So you need to have that great product and that great service, as well as having the smiley, happy people. So let's say for this people, we implemented a loyalty system. We looked at implementing, looked at like how we can improve our products, what more we can offer. We offered follow-ups with our clients. We also offered marketing. We actually remarketed back to our existing clients. A lot of people don't do this, and we're just staying top of mind. Sometimes people shop with you and then they just forget you exist, right? We all have busy lives. So just remarketing, let them know, hey, we're still here and we've got this new product, we've got this new thing. All of those things can help retain your clients and customers. So if we implemented this loyalty program, we looked at the customer satisfaction, and that means like looking over the entire customer journey, and that's like a bigger conversation that we can have, looking over all the different elements on why when a customer shops with you and the entire experience through awareness, consideration, delivery, the maintenance of the relationship and disposal of the product. Like, that's another conversation. We looked at all of that. And then we also looked at implementing remarketing campaigns. We remarketed back to our existing clients. We sent them emails. We targeted them through Facebook. We messaged them, things like that. We just had follow-ups. Just follow up with a phone call. Hey, how's everything going? How did you like your experience? Things like that. They go a long way to retaining customers. So let's say we did all that. How much do you think we could increase the retention rate of this company? So when it's got a current retention rate of 20%. Could we increase it to like 25, 30%? Again, potentially, I'm only going to change this to 21%. So this business, we're going to implement all those different things we just discussed, but we're only going to change the number from 20 to 21%. So now, we've effectively retained an extra 20 people. And this is why I want to say you might not, oh, that's not a lot. And it's true, it's not a lot, but I want to show you how these little numbers can add up to a massive difference at the end. So just bear with me. So we've implemented all these different strategies. We've implemented a conversion strategy, we've got more leads and inquiries, and we've looked at how we can make sure that the people that do come into our business stay in our business. So now we've effectively increased from 2,400 to 2,640 customers for this specific business. So now we need to look at, okay, how do we increase the average transaction value for this client? So how would you do this? Average transaction for a business, again, every business is going to be different. So, but this is the sort of key thing that comes to mind with this is like McDonald's, right? It's going to go Macca's and they're like, would you like fries with that? And every freaking time I walk in there anyway, I'm like, yeah, sure, I'll have fries. Like, oh, would you also like to get the new blah 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 bullshit thingy, Rob? Like, yeah, why not? Add it in. It's only another like bloody $3 or whatever. And so they do that because they're upselling you, right? They're offering you more things in part of your pack. The wrong way to go about this, though, is when you offer people stuff that they don't need. There's a lot of businesses. There's one that comes to mind. It's a certain phone company. I won't mention names. But every bloody time I go in there, like, I want to change my phone. I'm like, oh, cool, yeah. And they sell me all this other crap that I never needed. And yes, because you're in the moment, they have amazing salespeople, I must admit, that you work with, and I end up walking out with $2,000 of shit that I never needed. The problem with that is that yes, they did increase the average transaction value of that business, but I left with a sour taste in the mouth. I end up with buyer's remorse after I got those products because I didn't need them, right? They sold me things that I didn't need. So this is something you've got to be really careful. You can cross-sell and upsell and do all of those different things, but one thing I want you to keep in mind is what can we do to add more value to the client? When a client or customer comes into you, you do not want to be selling them anything that doesn't happen. So, for example, one of my businesses that I have, when we sell a pair of shoes, we offer them, hey, would you like to buy a pair of socks as well? It's a very simple correlation, right? When they buy a hat, would you like a hat brush? Like, it's just very simple. Like, is someone ever not going to want just the hat brush? You know what I mean? Like, it helps them keep the hat nice. Like, if they want that, then they can. And we can easily say, look, hey, you want to keep your couple $100 hat? We can keep it nice, keep it brushed. Like, here's a hat brush for $5. Like, it's simple things like that you can add on to increase that value. But what you can also do is package things. So let's say you package selling a camera, and you're selling cameras. Instead of selling a camera and then having your lenses separate, say you had a camera and lens pack. So then instead of buying the camera just by itself, they have cameras and they have like 5 lenses. And in total is 10% off what it would be if you bought them individually. And so that you can entice the customer to buying more by giving them a discount with things that are going to add value to the business. So let's say we implemented this strategy into here. So again, with the conservatives, we're going to do this and we're only going to increase it by $10. So we're going to increase this from 100 to 110. Again, this could be far more. You might find that by packaging or adding different values to your products, or even creating higher value products that you can upsell people to, you might find this could double or you could get 50% more on this. But again, we want to stay with low numbers. So, transactions per year. How do we get more transactions out of the year per customer? So, let's say these customers are currently coming in 5 times a year. How would we get them to come in more? And again, this will depend on the type of business that you have, whether this is something that's even possible, right? Like, well, it's always possible, but if this is an easy number to change. Some businesses it's super simple, some businesses it's quite hard. But let's say for this business, for example, we are going to look at implementing the part of the loyalty program is you have to shop every 2 months. You have to shop every 2 months and you acquire points. The more you shop, the more points you get, but they expire after a certain period of time. I'm not saying this is a good strategy, I'm just saying, like, off the top of my head, that's the strategy we can implement in this specific business. It could be a subscription business. A lot of pet food companies are going down this model now where you don't even think about it. You subscribe to buy your dog food and your pills and whatever, and they just turn up at your door. They've done that to increase the average transactions per year, as well as increase the retained customers, because they don't do it. You find there's a lot of crossover with some of the things that you can do. And so they look at that on how to increase transactions. Again, this goes back to remarketing to your clients as well. If you remarket to them, you might find that they will come in more often. And this also could be including creating new products or buying new products. Say if you're a clothing store, every season you might have a new range of products coming in. So making sure that your existing customers know about them and saying, hey, we've got a new winter line in, we've got a new summer line in, hey, autumn's here, check out this new cool thing we've got. That can then increase the amount of transactions someone does with you per year, because like, oh, I didn't realize you want that. Oh, I really need that new pair of jeans or something. So then you can go in and you can increase those transactions with your existing customers that you've got. So let's say we do all that. Let's say for this business, we only increase it by 0.5. So it's gone from 5 transactions to 5.5. So, this is just assuming, let's say out of 2 customers you've got, only one of them are going to come in an extra time per year. Again, this is being super conservative, right? And I feel like any business that implemented these strategies could easily hit the numbers that we're talking about here. So what we've done is we've increased the average transaction value to 100, from 100 to 110, and our average transactions per year from 5 to 5.5. So then we've increased our average annual customer revenue from 500 to 605. So effectively, we have taken the annual customer revenue up $105, and we've increased the total customers from 2,400 to 3,060. So that, if you times your total customers by your annual revenue, if you remember before, that annual customer revenue, you will get your total annual revenue for your business. So we've increased this from 1.2 million to $1,851,300. That's a massive increase for this specific business. That's an increase of $651,000 to be precise. So then we move over to your cost of goods sold. So how might we look at decreasing cost of goods sold? So if you remember what cost of goods sold are, is they're the products that they're like buying the stock, for example. That's a cost of goods sold. Getting the stock delivered to you is a cost of goods sold. It's all the costs that you have to sell the product. You can't sell a product unless you have it and you need to purchase it. Or it could even be, if you're manufacturing your own products, it could be manufacturing example. This does get a little weird, I've got to be honest, when you work with service companies. Like for us, for example, it's really hard. Sometimes you can argue that cost of goods sold could be the wages that you put into something. But then it kind of crosses over with expenses. It can get a little weird with service companies, so that's really something you got to talk to your accountant about. But let's say a normal product-based business, which is where cost of goods sold would mostly come in. It does come into service-based business, but like say mostly come in for this specific business, we're saying it's 55%. So how would we decrease cost of goods sold? So this could include things like bulk buying your products. So giving you better buying power, for example. A lot of times, just by increasing your annual revenue and increasing your turnover of your business, you end up with better buying power anyway, which can push down where you can negotiate with your suppliers and push down better prices. It could mean changing suppliers. It could mean going to another supplier and seeing if you can get a better deal with them. It could also include things like renegotiating payment terms. Say if you're currently paying on a 30-day end-of-month account, you say, hey, if I pay cash, can I get a discount? There's a company that we work with, and we pay cash for them, and they give us a 5% discount. And for us particularly, it works quite well. So there's lots of different strategies you can implement with reducing cost of goods sold. It could also mean bringing in manufacturing in-house, for example, and that could also decrease your cost of goods sold. So what we're going to do here, we're not going to change cost of goods sold at all. We're going to keep it at, again, keeping with our theme of being super conservative, not at all. Because you'll notice that a lot of things I just talked about, like bulk buying, renegotiating payment terms, potentially things like changing suppliers or even renegotiating your amounts because you've got buy betting power, you definitely can do those things that can push your cost of goods sold down. But on staying conservative, you might not be able to do those things for your business. That might not be possible. Like, nothing's impossible, but it might not be something that's practical, for example. And by doing those other things, you can actually affect cash flow. And like we said before, profit is not cash. Cash flow is incredibly important. And sometimes I would argue paying 5% extra to get 60 days to pay for something is more important than the 5% profit you're going to make extra on those specific things. But again, that's up to your business, and that's something we can go through if you want to work with us on that. But for this business, we're not changing at all. Super conservative. We haven't even changed this number, not even a cent. It's going to stay exactly the same as it was before. And so that, for this business, we go down into gross profit. So we now, just by making these few little changes without changing cost of goods sold at all, keeping it exactly the same, we've increased the gross profit from this business by $540 to $833,000. That's a massive increase. That's actually an increase of $293,000. That's money that you can now spend on more wages, on rent, on all these different things. But then we go to expenses. So how can we possibly reduce down our expenses? So there's something that I can do all the time is I always subscribe to dumb stuff and then forget about it. So something that we always like to do is go through all of our bank balances and look at each line that we've got and look at all the different things that we're spending money on and if we could cut them or reduce them. This could include things like moving. If you're paying a lot of rent in a certain area, maybe moving your business to another area where you can pay less rent and cut that overhead. Maybe there's inefficiencies you found that you can cut things on. There's honestly, there's a lot of ways you can reduce expenses, but remember what we've done. We're growing your business. We've now started in marketing. We've now started creating all these different incentives. We've now started creating more content. We've now looked at increasing our customer service. All of these things cost money. So we're actually not going to decrease our expenses. We're going to increase them. In fact, we're going to increase them a lot. Again, staying with the conservative number, we're going to increase the expenses by $150,000. Now, like I said before, everything we've done here is only a couple of percent, and in reality, it's probably not going to cost you $150,000 to do that. But again, let's say that for some reason it did. Again, being super conservative with this, it's going to cost you extra. Your expenses are going to go up. I mean, you need to pay for that website. You need to pay for these things. A lot of times, you need to invest in your business in order to grow it. It's not something that just happens, right? But a lot of times, you can do a lot of these things that we just discussed without a lot of money. But for the sakes of this experiment, we're going to increase it by $150,000. So it's gone from $400,000 to $550,000. So what do you think, by doing these small changes, what do you think the net profit of this business has increased to? If we've changed something by, haven't changed cost of goods sold, we haven't reduced them at all. We've got our transactions only increased from 5 to 5.5. Our average transaction value from 100 to 110. We've only increased our conversions from 20 to 22. Our retention from 20 to 21. These are really small changes that anyone could be able to do. What do you think the net profit of this business has increased to? From $140,000 to what? It's gone to $283,000. It's over doubled. Just by making these few small changes and increasing expenses by $150,000 to pay for all of it. Remember that. We haven't just done all this and not budget for it. We've said that if you just have $150K, could you increase all these different numbers by 1-2% in effectively overall? Most people should be able to do that. And again, we haven't even changed the cost of goods sold. If you did get better buying power, maybe this could become even better. But just by doing these few things, this business has gone from $140,000 to $283,000. What could that mean for you? What could an extra, a bit over $140K mean for you in your business? Could you take that vacation? Could you end up hiring that key staff member you need to free yourself from the business? And this is the amazing thing. When you start doing that, when you free yourself from the business, you start working less in the business and on the business, you can work out even more interesting ways to increase your leads. You can work out better ways to serve your clients and customers, which increases retention rate. You can work out better ways that you can add value and increase your transaction value. You might have more time to renegotiate and look at how you can bring manufacturing in-house. All these different things end up then sort of rolling onto each other, and it gives you both the freedom and the time to actually have a life, and then the capital you need to continue to grow your business and live your best life you can. So that's what I wanted to share with you, is the growth equation. How these small changes can all add up into a massive thing and give you the tools you need to only focus on a few different areas and how you can make your business extraordinary. So thank you very much for watching. I really hope you like and subscribe if this has been helpful. And if you have any questions, please feel free to reach out. We are always here. We're always willing to help. And we really just want to serve you guys. So thank you very much.